Hello there, welcome to this edition of Global Business Africa from the Kenyan capital Nairobi. In the next 13 minutes, we'll take in a journey across all the top business stories that have been making the news right across Africa, from Cairo to Lagos, Johannesburg and Nairobi. If it happened anywhere between those four, you'll know about it here. Here's what's coming up. The International Air Transport Association urges restraint over flight bans to states battling the Ebola outbreak. The SADC summit has come to a close and leaders are calling for value addition to natural resources. And we'll introduce you to Somalia's determined entrepreneurs. One of them is keen to revive the country's economy after more than 2 decades of war. So then let's start tonight's program in the aviation sector with the decision on whether or not to ban flights to and from countries affected by Ebola dominated discussions at an aviation conference in South Africa. The International Air Transport Association says it will not be dictating to airlines whether or not they should stop flying to affected countries. However, British Airways, Korean Air, Kenya Airways, these are just some of the carriers that have suspended flights to Guinea, Sierra Leone, Liberia and Nigeria over fears of the virus spreading. Angelo Coppola has more on that developing story.
The Ghanaian and South African Ministers of Transport spoke at the opening of the IATA conference, and Ebola figured prominently in their conversations.
We have not taken a decision to prevent flights in and out of these areas where the virus is not as of now.
We have not arrived at the point where we can say that we can give an indication or make a determination with regard to SAA flying to West Africa.
IATA was at pains to point out that it will be guided by the World Health Organization in terms of the spread of the virus. It won't interfere in the operational decisions of its members.
The IATA cannot sanction an airline for taking a decision not to operate a commercial route. IATA would respect the independence of airlines and their independence to make commercial decisions.
Ghana and South Africa reiterated their position not to ban flights into and out of Ebola-affected regions. They are taking preventative measures.
We have digital thermal thermometers for testing passengers, and any passenger that is found to have unacceptable temperature is isolated, because we've developed isolated points around the airport.
Like I said, we are on high alert. We've got frameworks in place, we've got structures in place, and I'm sure you are aware that all our 9 provinces have got centers which has been demarcated and well equipped to be able to deal with this particular challenge.
The spread of the virus remains a critical concern to the international aviation sector. This is despite assurances from the World Health Organization that it's not an airborne spread disease. Delegates here at the conference will be keeping a close eye on developments as more and more airlines confirm that they're not going to be flying into or out of affected areas. I'm Angelo Coppola for CCTV in Sandton, Johannesburg.
Also in Africa, a committee of Nigerian bankers says it will be pumping funds into local rice production to help the country cut its reliance on rice imports. Nigeria is one of the world's biggest importers of the grain. It imports about 2.4 million metric tons of it every single year. And that, in effect, is exporting jobs and foreign currency earnings while draining the country's foreign reserves. Now, the committee says it will add value to the sector and create jobs in the process.
So today we have about 8 million plants, 18 million plants that have installed capacity of 1.1 million metric tons. So if we can bring this to optimum production level, we will have saved significant portion of the foreign exchange that we currently spend on importation. And beside the foreign exchange, we will create a large number of employment in the industry.
The cost of constructing roads in Uganda is going down, and that's partly thanks to the entry of Chinese companies into the infrastructure sector. The East African nation, like so many others across sub-Saharan Africa, is in dire need of more and better road and rail links if it is to fuel growth and create employment. At the same time, Ugandan authorities have increased the country's infrastructure budget with a view to expanding the existing road network. Here's Michael Beleke with more.
Uganda's infrastructure budget stands at over $800 million, 4 times more than it was 10 years ago. So more roads can now be built. This is also being helped by a drop in road construction costs, according to authorities in charge of the country's road network, fueled by a dominant new player in the market.
We wouldn't have been able to start all these projects we are starting. As I speak now, this year, calendar year only, we have about 11 major projects which are starting, and 10 of those projects are being done by Chinese companies.
Alinange says the entry of Chinese firms has presented stiff competition to their European and American counterparts, which has been extremely beneficial for Uganda.
4 years ago, construction of 1 kilometer of a road in Uganda was about $1.2 million US dollars. And this year, we floated about 7 major road contracts. And the average cost per kilometer for the tenders returned for last year and this year is about 800,000 US dollars per kilometer. In some cases, we've even received 600,000 US dollars per kilometer.
Thousands of Ugandans are employed by the road construction industry, and according to Uganda's Roads Authority, the current projects will also help increase Uganda's trade with countries like South Sudan, Rwanda, and Burundi. An improved network of roads will connect more parts of Uganda to the port of Mombasa in Kenya, which is key to regional trade. Road transport is by far the most popular mode of transport in Uganda, carrying over 80% of passengers and freight. China has identified that as a potential area for growth that could help unlock Uganda's economic potential. But local contractors are struggling to compete with their international counterparts.
The government does not set out to provide, to help such firms access financing. I don't think they are going to be able to compete with international firms. And I think it's in the interest of the government that these local firms also do these big jobs, because there the money stays here.
In 2013, China pledged $20 billion US in loans for infrastructure development in Africa, with sectors like construction proving lucrative. Trade and investment between the two regions is only set to keep growing. Michael Baleke, CCTV, Kampala.
The Sudan Telecommunication Group, better known as Sudatel in short, is expanding its business activities in a number of West African countries where it does provide telecommunication services. It operates in Sudan, Mauritania, Senegal, Ghana and Guinea, where it offers a variety of mobile, fixed line, internet and broadband connectivity services. Sudatel is profitable in those countries and it's now planning further investments over there. The company has received about $50 million for expansion plans in Mauritania. It also has funds to help its operations in Guinea expand and improve network coverage. Elsewhere, Northern Platinum plans to buy more assets as part of efforts to spring back to profitability after protracted strikes savage production and finances by extension. Northam's management says the company will be using its positive cash position and it will call on shareholders for more funds to enable it to acquire more assets and hit a production target of 1 million ounces a year by 2020. It is reviewing its strategy in anticipation of arising opportunities in the platinum subsector. Anglo-American Platinum, the world's top producer of the metals, right now plans to sell a couple of mines and divest from a few joint ventures in its drive to recover from AMCU's 5-month-long strike earlier this year. South Africa's government prefers to have a local buyer for the assets that Amplats is disposing of, and Sibanye Gold is currently the frontrunner to acquire them. Let's get some analysis on what exactly will be going on in Northern Platinum, especially with its drive to bulk up. Melanie Ralph is live in London with a bit more analysis right now. Melanie, Northern Platinum expects platinum rises to essentially rise strongly through to 2018. But what exactly informs this forecast?
Well, as with everything, it's all to do with supply and demand. Platinum prices have been supported by a surplus of the commodity and the backdrop of a slowing economic outlook at some of the major consumers of the metal. Northam predicts we'll start seeing the market tightening and a shortfall in platinum supply is likely to set in after 2018, according to the miner. The recent mining strikes added to the pressure in the platinum market, and now we're seeing a rejig of the whole sector, including the biggest miner, Anglo American, selling 4 operations in a bid to improve their balance sheet. And Northam is eager to boost their production and are ready to act and get in on some of the good deals.
Indeed, Melanie, however, let's focus on something you just touched on there. Aside from the assets that Anglo American Platinum wants to dispose of, what other assets out there which haven't gotten as much media attention does Northam have in its crosshairs?
Well, that's the question. As I was just saying, the whole sector is seeing a shake-up, with possibly all the big players looking to sell off assets to improve their long-term outlook. Impala, Aquarius and Lonmin could sell assets, according to analysts I've been speaking to. Northam have been making noise that they're ready and willing to be part of the action, which to some has come as quite a surprise. Some analysts say they don't have much cash or great assets to bring to the table, so the proof will be in the pudding as to whether Northam's plans come to fruition.
Indeed, we'll have to leave it there. Thank you very much for that. That's Melanie Ralph live in London. Quick run through the equity markets here for you. All the markets broadly started the day lower, except for the JSE. The all-share index posted gains today. Platinum stocks, of course, leading the rise there. Palladium, of course, is at a 13-year high. We'll talk about that a little later. Implats and, of course, Amplats, both up by well over 200 basis points. With respect, however, to the Kenyan index, the NSE, this, of course, did hit a 7-month high last week Friday. Today, it started much, much lower. Keep an eye on tea stocks. Tea prices have been absolutely depressed over the first half of the year, and we're seeing that now in some of the results coming out. Limuru Tea, for example, profit before tax down 42% to $122,000. When we come back, SADC Summit, it's over. The leaders are calling for more value addition, but how will they achieve this exactly? We'll be assessing that next. Africa is on the move. It's home to 7 of the world's 10 fastest growing economies.
From small businesses to large-scale enterprises, hear directly from entrepreneurs behind the story. It's about putting you in the picture so you know where Africa fits in the global context.
Global Business, weekdays at this time on CCTV Africa.
The rebasing of Nigeria's GDP has been a long time in coming.
The information provides us much more scope to know what the structure of the economy is.
Welcome back. You're watching Global Business Africa from the Kenyan capital, Nairobi. Now, the curtains have fallen on the 34th Southern African Development Community Summit in the Zimbabwean capital. The highlight of the event was the announcement of the new chair, the Zimbabwean head of state, Robert Gabriel Mugabe. Now, in his speech, he warned that over-reliance on the integration partners compromises ownership and sustainability of the bloc's programs as a whole. Now, he called for an entirely new rethink of financing the manner in which these operations across the entire bloc are actually funded. Right now, 60% of those programs are funded by someone other than SADC's 15 members. Leaders at the meeting also agreed on new plans to improve regional integration. CCTV's Farai Mokhtar earlier told us of the expected conclusions. His report starts us off with a focus on the SADC summit on what's hot tonight.
Well, day one yesterday ended with the SADC leaders going into closed sessions, as they are this morning, discussing the nitty-gritties of the different plans that they're coming up with for the next 12 months. The official closing ceremony is set for later this afternoon, where different instruments of power and agreements will be signed. Thereafter, the new SADC chair, President Robert Mugabe, is expected to address the press. The focus this year is mainly on matters to do with the economy, but President Mugabe did allude to the fact that SADC must take pride in maintaining peace and stability in the region, and that will also be a dominant factor going into his chairmanship over the next 12 months. Farai Mwakutuya, CCTV, Victoria Falls, Zimbabwe.
Let's figure out some analysis on what exactly SADC has done and the gap between what the leaders of the bloc say they want to do and what they've actually achieved. Isaac Mogotsi is the Executive Chairman of the Centre for Economic Diplomacy in Africa. He's live in Johannesburg with us tonight. Thank you very much for your time this evening, sir. SADC launched its free trade area in 2008. What is your assessment of its implementation so far? Has it achieved its goals and objectives? And if not, what more needs to be done?
Good evening. Pleasure to be here. I think firstly we should start by congratulating the leaders of SADC for a successful 34th session of the SADC Summit. We should also compliment the leaders for paying sufficient attention to the challenges of economic integration. I think, as you rightly pointed out, there was previous decision to strengthen and deepen SADC economic integration. I think the results are very promising. It is true that there is a long way to go. As you may know, not very much more than 10% of SADC trade is still is amongst SADC members, but I think the indications are positive. If you see examples such as the linkages that was referred to by the leaders between Namibia and Botswana, the Trans-Kalahari train, also the infrastructure roads that link South Africa to Mozambique, to Botswana, right through to Namibia, and also the huge people movement, trade movement that happens between South Africa, Zimbabwe, DRC. I think you can see that a lot of harmonization has happened to propel the movement forward in this sector.
Indeed, but let's focus on one particular thing here. SADC is yet to get a deal on creating a single visa-free environment, or a regional visa for that matter. How exactly would a single regional visa make it easier for businesses to get access to labor from any of these 15 countries that make up the trade bloc?
I think at the heart of the resolution to hasten easier movement of people is harmonization of the visa regime, as you rightly point out. This will benefit business and hopefully will give business a fillip to move forward, so that people who have skills can move within SADC. Business can move around with ease to invest from one region to the other, and also the movement of products and services. This holds great promise for SADC integration, development, and also wealth creation, because without ease of movement of goods, of people, of services, it's going to be difficult to see how SADC integration can happen as we go forward.
Indeed. Help our viewers understand this. Is this just a case of narrow local protectionism that's stopping SADC members from setting up a single visa or single visa-free area? Or are there other more valid technical reasons as well as to why we don't have a single visa-free area already?
My suspicion is that it has more to do with technical factors, because for free movement of goods, services, people, you need to be sure that the SADC area itself, its borders are secured sufficiently in terms of ports, airports, even land borders. I think there is a lot that needs to be done to upgrade the technology that help these countries and member states to ensure that all people that move to and fro within this free trade are, if you allow me, quote unquote, desirable people, and that people who may come from outside are not necessarily people who do bring the thing that are intended and desired within the region itself. So it's going to take a bit of time. It needs technological base, it needs education base, and it needs harmonization between the Home Affairs departments of the region also
Indeed.
for this to be successful.
Indeed. Let's move on to something, of course, that President Mugabe focused fairly heavily on in his speech, more local value addition for natural resources within the region. But the approach that Zimbabwe's government has taken to this has been heavily criticized. Shouldn't the focus be on establishing prerequisites like proper road, rail rings and affordable electricity across SADC members before we start talking about local value addition?
I don't think there is a contradiction. I think what was said at the summit correctly was that the previous generation of liberators of Africa from colonialism had set the agenda of political freedom, and that that has largely been fulfilled. What we need to move on to now is economic freedom. At the heart of that would be the capacity of the SADC countries to beneficiate the products within the region, so that you kind of move away from this historical trend of raw materials being exported to foreign markets out of SADC, and when they come back they are more expensive, and you lose the capacity to create jobs, to enrich your people, to develop business, to develop skills that are necessary for beneficiation. So I think the call is a valid call, it's an honorable call, it's a timely call. Whether you can contradistinguish, say, beneficiation from infrastructure development, and whether such a contradistinction is a necessary one, I think it's a matter of debate, but I think the two should be seen as going in sync.
Indeed. Final question to you, Mr. Mogotsi. Are there successful examples of beneficiation projects within the 15 member states of SADC that can offer a template, perhaps, for the rest of the group to follow?
I think there are. I may not be able to enumerate all of them tonight, but I think if you, for example, think of what the president of Namibia said in his report about the great strides Namibia has achieved in terms of the sector of fishery, the amount of work that has gone into ensuring that the fishery products are beneficiated and are of such nature that they can create jobs, they can help to expand the economy. The case of Botswana also comes to mind in terms of beneficiation of diamonds from their diamond mining, where in the past all the diamonds would go, say, to Europe in Antwerp or to some other markets like Israel. I think there has been an agreement between the Botswana government and major diamond producers to say beneficiation must happen largely in the country. And I think South Africa also has taken a very important decision to say, with regard to minerals such as platinum, in the platinum belt, there has to be a movement towards ensuring that beneficiation takes place within the country. Those would be some of the examples, but you can find the examples in the agricultural sector. You can find the example in manufacturing. Say, for example, the question of South Africa in the automotive is something I can talk to if time allowed some more.
Indeed. We'll have to leave it there, unfortunately, but thank you very much for your time, sir. That's been Isaac Mogotsi, Executive Chairman of the Centre for Economic Diplomacy in Africa. He was live in Johannesburg for us tonight. A quick run through the commodity prices here for you. Some interesting developments, frankly, across the board. Palladium prices at a 13-year high. A rare bit of good news if you're a platinum miner, partly because of supply concerns in Russia. That pushed prices up. Oil, however, is at a 14-month low, well under $102 a barrel last I checked on Brent crude, partly because the market, for lack of a better word, is rather well supplied. When we come back, we'll introduce you to one of Somalia's determined entrepreneurs, keen to revive the country's economy after more than 2 decades of war. We're off to pay some bills, but stay right there. We'll be back shortly. Welcome back to Global Business. Now, after 21 years of civil war, Somalia, to put it mildly, is wide open for business. Many Somalis who've been living overseas and in neighboring countries as refugees are now going back home after acquiring knowledge, technical know-how. Some are now taking part in reviving the country's economy. In Grassroots tonight, we focus on Hussein Osman. He's just back from Turkey and he's set up a thriving construction business.
My name is Hussein Osman. I was born in Mogadishu. In 2008, I went to Turkey to have my MBA degree. In 2011, I decided to come back to home. I've decided to make a business, to have our own company. The company's name is called Starsom, which means the Star of Somalia. Our business is mainly concerned with the construction. You know, the whole country needs to be rebuilt. Whenever you go to the city, there is a lot of construction. It means people are morally motivated. They're working to renovate their houses. We can start from here. It's a place where students will play football. We have intended that this place, they can have fun, they can play volleyball. When people want to watch a football game here, when students are playing, the elders, teachers should stay or sit here and can have their own coffee, tea. When people come back from abroad, for example, everybody brings a new vision of experience from the country he came from. They're creating their own businesses, and this will create opportunities for the people who are already in Somalia. My hope is that I've started something new in Somalia right now. I'm really trying to make this business a stable business that will be more helpful both to Somalian people and to the country of Somalia, rebuilding from zero.
Quick run through the currency markets here for you. We're keeping a very close eye on the Kenyan shilling. You see, over the last couple of weeks, the markets have been fairly tight. Liquidity conditions have been fairly rough. Government hasn't really been paying out or distributing cash to its various contractors, sub-governments and so on. And therefore, the Kenyan shilling has had a bit of support. Nonetheless, it has slipped. We're now seeing it at about 88 to the dollar. The question is, once liquidity conditions become normalized, what will happen? Will we see the rug pulled out from under the Kenyan shilling's feet? We'll have to wait and see. That said, the rand fairly steady at around the 100-day or so moving average. Now, just before we go, here's a preview of what's coming up in Global Business tomorrow. We'll be looking at some fairly interesting numbers on Africa's aviation needs. Plane manufacturers say the continent will need over 1,000 new aircraft and about 36,000 technicians to fly and maintain them in the next 20 years. We'll have details from the ongoing IATA conference in South Africa. We'll also be focusing on the booming pure water business in Togo. Now, there's a very short span in which the business has gone up, it's thriving, and products from the country dominating the market in neighbouring Liberia. It's an interesting story. This one certainly one to keep an eye on. But that's it for this edition of Global Business. Send your feedback, good and bad, to globalbusinessafrica@cctv.com. You can also check us out online, Facebook, Twitter, wherever you are. So are we. The news continues over there 24/7. Thank you for watching. I'm Ramanya.